Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with Massar and Jess Menton. We welcome our audiences across Bloomberg Television, radio, and originals, and those folks streaming on YouTube. Here we are, Massar.
Yep.
This is a real-time stress test, not only for banks, but really kind of a gut check, I think, for the markets, and I guess really a binary decision right now for regulators worldwide.
Yeah, I mean, and what's interesting is you do see, I feel like, the equity side of things moving off their worst levels of the sessions. It does feel like regulators are increasingly coming in. Although I have to say, Jess and I just had a conversation with Phil Taves. He's CEO over at Taves Asset Management. He says we are in a slow meltdown, and he expects 50% drop in stocks because he said ultimately the Fed is going to be working against us longer term.
And again, pointing back to what we were looking at with this data, whether it's a softer retail sales number, also the producer pricing is coming in cooler than expected. That's really important because if you look at that PPI-CPI spread, it has been improved vastly over the past 2 years. And the reason it matters, typically it bodes well for corporate margins and the stock prices. So that's a trend that investors want to continue to see over the coming months with that data.
Yeah, the latest data prints, of course, do support the case for the Fed to pause. But what you said, Carol, is really important because it goes back to that idea that at some point the Fed will need to make a decision about whether it really needs to come in and save the financial system, the banking system, or it needs to continue fighting inflation. And those two may be at odds with each other.
Yeah, and we should really point out, though, too, the global nature of this, too. We talk so much about what we're going to hear out of Jay Powell and the Fed. Christine Lagarde has a big press conference ahead of her tomorrow over there in Europe. Of course, we talk about an ECB that's going to have to figure out what to do with Credit Suisse, but this really goes beyond that. You have a market here in the United States really trying to make sense of it, and I guess they're taking it in stride. You are seeing a little bit of a green on your screen, and we'll start with the NASDAQ composite, because it is going to finish in the green on the day. Less than 0.1%, but I think some folks will take it, given that at one point on the day, it was down around 12,026. The Dow Jones Industrial Average down on the day by about 0.9%. The S&P 500 going to finish lower by about 0.7%. And we should point out the small caps and the mid caps heavily weighted to that financial sector, particularly when it comes to the medium-sized banks. They're down about 2% on the day.
Yeah, I think it's interesting, Romaine, that we did see some buying into the close, certainly on the equity side of things, and we're finishing, pretty much near or just off our best levels of the session. Having said that, I'm focused on the VIX, up 2 points here, just under 26. But, Scarlett, I think about the days when things were really coming undone. You saw the VIX spike. I feel like there's still a lot of complacency in the market when there are so many questions about what comes next here.
Yeah, I've been puzzled all day as to why media, entertainment, and utilities are the leading gainers here in the S&P 500. It's a weird mix because normally you have utilities, household personal products, food and staples. Those are your defensive sectors, quality earnings, dividends, all of that. But you throw media and entertainment and growth names in there, it just doesn't really gel in my mind. Of course, on the downside, energy stocks are the big losers on the day, with WTI and Brent crude falling to 15-month lows, and banks and insurers, we can't talk about it enough, each down by at least 3.6% on the day.
All right, so let's get to some of the individual gainers in the session. A lot of these names top in the S&P 500. In fact, I think they all are. Among them are some of the mid-cap banks, if you will, and that's a result of UBS out with a call on 19 names. Some buys, some sells, some holds. Comerica, it is number 2 gainer in the S&P 500, up 3% in today's session. So UBS coming out with a buy on that stock specifically. Schwab, also top in the S&P 500. In fact, it's the number 1 gainer in the S&P. It's up 5% as we speak. Credit Suisse upgraded to outperform Charles Schwab today from neutral. Analysts saying they are taking advantage of a sharp share price decline. It's still down about 30% year to date, but we're hearing analysts in general come out and say, look at this name. It's been beaten up. There's some opportunities. Netflix, check it out. Top in the S&P 500 and in the NASDAQ 100. Oppenheimer out with a note saying that Netflix looks attractive following recent weakness, showing a buying opportunity. They also affirmed their outperform on the stock. So I do feel like we're continuing to see that narrative from some of the analysts out there.
You know what the great thing about Netflix is? They'll have a documentary out on this banking crisis by next week, I'm sure.
I thought she was going to say.
I think that's all they show right now, are just scandal documentaries. Jess, what do you got?
There is a lot.
I'm going to take the decliners. I obviously have to start off with what we're seeing with Credit Suisse. Looking at that ADR, it paired a record 30% drop, closing lower by 14%. This comes as obviously it's Switzerland's central bank and financial regulator did say that Credit Suisse will receive a liquidity backstop if needed, obviously an effort to try to help this slump in confidence that's happening around this troubled lender. I'm going to move next over. If you're looking at First Republic, that ending down a little over 21%. It did lead a rout when you're looking at what's happening with U.S. regional peers after being cut to junk by two major credit firms. And then lastly, we're going to take a big look at what's happening with these bigger banking giants. If you're looking at JP Morgan, down just under 5%, had been down more than that in this session. But again, some of these bigger lenders, when you're looking in the U.S. side of things, also getting hit today as well.
And I just want to add one to your list, really a group here. The energy sector as a whole having an awful day. The S&P 500 energy sector down more than 5%. That's the worst day that we've seen going back to September of last year. And they're now back down to those October lows. A lot of volatility in the commodity space and, well, a lot of volatility in the Treasury space as well. Let's take a look at it here. 33 basis points down on a 2-year yield. We talk about the flip-flop here. We were above 5% last week, dropped down to 3.93 on Monday, then rallied, and then we went back up, of course, on Tuesday, and now we're back down to 3.92. Similar story for most of the other parts along the curve. The 10-year yield down 22 basis points, and your 30-year yield right now, Scarlett, down about 15 basis points on the day.
Yeah, so as a result, we're seeing the yield curve steepen as well. It's still the spread between the 2s and 10s is still somewhere in the neighborhood of 41 basis points. But a lot of people point to that steepening yield curve as perhaps the last bit before a recession is forthcoming. Of course, the inverted yield curve is a signal of recession, but typically what happens is that it'll start to steepen right before the recession actually hits.
Yeah, I want to go back to commodities because we did see the Bloomberg Commodity Index down about 2% today, and we did see them dropping to a 14-month low. Like, if this sticks, what does this say potentially? Is it just worries in general, or are we starting to see further cracks in the global economy here?
Something I wanted to point out, tomorrow actually marks the 1-year anniversary from when the Fed started beginning this tightening cycle. And all the conversation coming into this year was, when are we going to beginning to see these sort of lagging type effects? You come into this week, now we're beginning to see that.
So, Jess, does that mean that, well, next week, is that the end of the tightening cycle?
That's the million-dollar question that everyone wants to know, Romaine.
Do we still care about earnings?
We do, because Adobe has just come out with its numbers, and this is the regularly scheduled fiscal first quarter earnings, and we have adjusted EPS of $3.80, better than the consensus estimate of $3.67. Revenue in the period was $4.66 billion, slightly higher than what analysts were looking for, which was $4.63 billion. As for its full-year forecast, it sees full-year adjusted EPS of $15.30 to $15.60, higher than what its previous range was. And it sees its second quarter adjusted EPS of $3.75 to $3.80, whereas before it was Wall Street analysts were looking for $3.76.
Yeah, interesting numbers. And look, I mean, we've spoken so much with the folks down at Bloomberg Intelligence, and they've reiterated this. The subscription revenue for this company has really been on fire. That pivot that they made a few years ago that everybody kind of derided and thought they wouldn't do has really paid off.
They invented it.
And I know. As somebody who's paying for a subscription grudgingly, they got me. And they got a lot of folks out there. But that's the idea, though, too. We talk about the resiliency of the economy and where you can find it. And I think some people would point to some of these software and services companies, particularly the ones that have that subscription model, particularly those tethered to corporations.
Well, it's interesting too, Romaine. You mentioned Smartsheet earlier. They're a software company. Sentinel One, another one. I mean, these are smaller, kind of $4 or $5 billion market cap. Both came out with earnings, and they were rallying in today's session. So this software space is interesting, and I think if companies, if they need it to, run their business or to find kind of better productivity, I mean, this is where they're going to spend their CapEx money.
I'm curious. So I do want to go back to the Fed, because there's this talk here about this binary decision they have to make. But you look at these earnings out of Adobe, you look at all the earnings we got this earnings season, and there is strength. There is stability, at least, if you will, to a certain extent here. And I wonder how much that becomes part of the conversation. Can you sort of isolate what's going on in the banking sector and say the rest of the economy can withstand further rate hikes if necessary?
When I've been speaking with my sources on trading desks, Romaine, they're getting so many calls and fielding it from their clients. And a lot of them have been coming in. They've been waking up at 3 a.m, going to the trading desk at 6 a.m. to try to field these calls. And obviously the clients want to know, where is this headed? What does this mean for the Federal Reserve?
The problem is, even if it's limited to the banking sector, those banks will become more conservative in how they lend out money and how they deal with their customers. And at some point, that's going to filter down down into the real economy as well. So you have pockets of strength with companies like Adobe and other software names that rely on that recurring revenue, but eventually that erosion from how banks will service their clients will start to be felt.
Psychology versus fundamentals, right? This is the debate that we're in, and ultimately psychology can affect fundamentals, and so that's where we can get to, but we'll see how the Fed calls it. All right, guys, that's a wrap. Our cross-platform coverage, radio, TV, Bloomberg Originals, and YouTube. We call it
Love YouTube.
I know you do. It's the
Shout out
cats,
to-
right? You watch the cats.
Cats? No.
A lot of cat videos.
No, no
Cats on those Roombas?
Romaine. All right, we will see you tomorrow, same time, same place, everybody.